Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It is what is it? It's 9:32 evening in Tokyo. Their market's already closed for the day. Let's see what we got going here in the States. Our markets are just getting rolling. In Europe, they've been rolling for about 5 hours. So we're seeing, they've been selling the market down. You can see the dollar over here on Chicago Quant. No, on J. Well, both of them. You can see the dollar on J4X right there. You can see two green. See that right there? Two green in a row. This is the daily chart. Now the weekly I don't think has altered anything in particular. Let's just take a look. But pretty much the dollar's being bought a little bit here. Again, you got to take a profit sometime. That's pretty much what it comes down to. Now you can see the weekly there is not. Let's see what we got on the Chicago Mercantile, on Chicago Quant. Let's see, where's it at now? Right there, dollar index right there. And you can see here it's lifting up. Also, it's been through. It went into the daily buy on Friday right there. And is that Friday? That's Friday. What is that? That must be last night. Either way, it's through the buy at this point, and it's higher today than it was last night. And the weekly not budging. We're not seeing any real action on the weekly side of it. It's still in that long. We put a box up there even. We showed you that. Let's see, where's that mouse at? You can see it right there, the box. It's been sliding slow and steady, on a daily basis. And over here, same way it was on J4X, right there. That slow, steady drive down, you could say, just slow and steady, just bang, 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 bang. A couple, profit taking at points you can see right there, but overall, just a slow, steady burn. And that weekly doesn't seem to be really trying to adjust. As you can see right there, it went into the weekly sell, and it's been staying in there. And same thing with J4X. You can see that weekly sell has been going on for a while. Just a steady consistency. We're down at the bottom end of the range here. You can see that the green line is trying to turn up, but nothing major. And over here on Chicago Quant, you see the same thing. You see the green line is tried to turn up through the manifold. It got close to the zero line and then rolled over again. Just the same way as it is right here. Doing that same thing about 4 weeks back. And we figured it, same old, different day. Oh, let me get the chat line going. Let's get that chat line going. Let's see who has showed up this morning.
What's going on with Secos today?
Oop.
Starting the day with a little morning yoga.
There we are. Skip that. There's Robin. There's Metho. Hey, guys. Hey, Robin, you see that email I sent over? They were the ones who connected to the LinkedIn. We can take a look at that afterwards and even look deeper if you want. And either way, that's where we are at the moment when it comes to the dollar. The dollar is showing a little strength in here, and you can see it. Let's drift a little bit. I saw this when I was doing the charts this morning. I thought, and I did, and also on Saturday I noticed the same thing going on. Let's just point it out even a little bit better. There's the 30-year. And you can see we've been in the, this is when it goes up, interest rates are going down. That's how that works. And when this is the price of the bond itself, what you pay for the price of the bond. And when it's going down in price, that means that interest rates are rising, okay? So it's got that. That's why they have the TLT and all those other things, that makes it a little bit easier because people get a little confused. When interest rates are rising, okay, and they're getting more expensive, or in the case of when interest rates are going up, becoming more expensive from say 4% to 4.5%, you get a decrease in price of the bond. The bond itself is cheaper to buy, and then vice versa. When the bond is going down in price, interest rates are rising. And so when bond prices are dropping, interest rates are rising. The interest rates work the opposite of the price. And then when the price of the bond goes up, interest rates are dropping. Okay, so when the price of the bond goes up, it becomes more expensive, interest rates are dropping. Okay, and so you can see here, this is the 30-year. Let's look at the 10-year. Here's the 10-year. You can see the same action. A little bit, actually, there was a little zigzag going on in there, but it was interesting, and that is that, you can see here, it's going down in price. They tried to pop it, but we had a red and green. It didn't work, of course, and we still stayed in that sell. And at the same time, though, the weeklies are still holding up. Same thing with the 30-year. You can see that the 30-year bond, the weekly is still holding. Matter of fact, the line is even launching itself. Overall, it's taking off like an airplane off an aircraft carrier. The fast algorithm is dropping underneath, which is interesting. It's telling us that some weakness is coming. And then when we go to the 5-year note right there, you can see the same thing. It's price of the note is going down, and that means interest rates are rising. And so when interest rates rise, they buy dollars, and when interest rates drop, they sell dollars. That's usually the way it works. And that's that fundamental that sometimes is in sync, and then not the rock group or the music group, or the vice versa. They usually work together. People or companies and so forth, they park their currency in something paying a return. They sure try, let's put it that way. I know we've just gone through 10 years of insanity where bonds were not only weren't they paying interest, you had to pay the government interest and buy the bond at the same time. So not only do you buy a bond, but at the same time, you also have to pay the government interest to own the bond. Talk about crazy. Wow. If you'd have told me that 30 years ago, I'd been like, what? Must be enormous desperation. There must be great calamity in the financial markets. And bingo. Bingo, bango, bongo. I mean, I would have said, wow, Lloyd's of London must be bankrupt. They are. Deutsche Bank must be basically bankrupt. It is. And so forth and so on. No, those are just propped up in name only at this point. Citibank must be bankrupt. It sure is. Matter of fact, someone was talking to me about the price of stocks and the bankruptcy price of stocks. In other words, when a stock is trading at $3 or $4 a share after being trading at $30 or $40 or $50 or $100 a share, we call that a bankruptcy price at $3 a share, and it usually vacillates between 2 and 3. And basically, Citibank is still vacillating between, well, it's just above the $3 area. It's around the $4.50 area at this point. And what they did is they did a reverse split. So they take 10 shares and make it 1 share, not the other way around where you take 1 share and break it into 10 shares. So just to hide the ugly. But this is what's going on in the bonds, which then goes and relates to, let's just go over to it. And it relates to the currency. So right there's the euro. The euro slid into a sell on Friday. It's up higher today, but it's still in our work in the minus. But the weekly is still in that long weekly buy. You can see that right there. Long weekly buy from back in the 90s, all-time lows. Found a way to get into the buy, and it stays in that buy. And then let's put it up over here. Where is it at? The euro. Euro on the wall. Right there. And you see here, same situation. And you can see this is the euro. And it's still, this is the weekly, but then when we slide over into the daily, right there, you see a little red going on. You see a little green trying to turn back up again. You see the green line breaking down. So it's, it's showing you that weakness that we're seeing at the moment. Nothing major. We don't expect to see anything big out of this more than, it finding a way to go back up. That's all. And then, where are we at here? From there, oh, okay, yes, cool. So from there, what is that? Let's kill that right there behind it. There we go. We go over to the cable, see what the cable is up to. That's the British pound against the dollar right there. It stayed in the buy for the last couple of days, but today it's pushing underneath now. We've only been in a weekly buy for 2 full weeks. This is starting the 3rd week of it. And we'll see how well it does with that. And then you can see right there, we're getting a little red today. The line is broken underneath right there. And then let's put it up on cable. Oh, and also at the same time, you can see the, where's that right there? We can see the weekly still looking firm, and it's above the manifold. But the fast-moving stochastic, no, that's not stochastic. That's our algorithm. Our fast-moving algorithm itself, which is faster than the green line, is trying to curl a little bit over. But I don't think it's mean. I don't see anything particular coming out of it all. I just figured that they're going to stay the course. Let's see, British pound, right there against dollar. You see 3 days of green. Green. This is the daily right there. And then same action there. Let's see. Now from there, we slide over to, where do we go from there? We go to, where is it? It is the, there we are. Let's go over to the Swiss and see what the Swiss is doing. Swiss has that same action going on. It is trying to get into the daily buy today. You can see that there. It's a little bit down from yesterday. Nothing major, or Friday, that is. You see the weekly is trying to turn up to it right here. You know, it's done it before where it tries to climb up. Notice that the fast-moving algo doesn't seem to be able to get over the line. I mean, it's over the manifold, but it's not over the line. It's been hovering underneath it. And you can see even the fast-moving now is the manifold is tightening. Our nonlinear time manifold is tightening. And you can see, you know, we have, I guess what we have is Bollinger Bands up top just to give you a flavor of the action. You know, how our math picks it up days and weeks ahead of time. Now, let's put that up on J4X. Right there we are. You can see it's just, this is the daily. And you can see it's zigging and zagging, a little red, a little green, a little red. You see the little green line trying to turn up at the moment, just as we are right there trying to turn up, as you can see. Let's try to turn up right there. And if we widen that out again, so you can appreciate it more. Why don't we do this? Let's give it one of those little spinny things and clean it up. There we go, like that, and then widen it so you can see a better perspective of it. Does that help any? I don't think it did. I guess there it is. I guess that's it, like that. So you can see it still gave us a volatility signal on Friday. It's a little bit lower than today, but you can see it's trying to turn up right there on the weekly, and the daily is already there trying to, you know, it's going to slide into a daily buy if it stays like this. And you can see same situation going on here on the daily, and then the weekly. There's the weekly. Live trading with Doc. Bingo, bango, bongo. Right there, there's the weekly. Oh, there's Janos. Hey, Janos. I forgot to set the notification. Got distracted by questions from one person. One moment. Oh, good. Good. You know, Doc is always happy just to be talking to himself at this point. I like getting all those ideas out of my head and getting them up on the World Wide Web. I find that to be very pleasurable I would love people to have ask questions. It's always even more pleasurable to have people ask questions. So combine those two things together. I hear you, and no worries, mate. What else can we say about these currencies at this moment in time? Just that the dollar is, as I showed you with the bonds, interest rates are rising here in the States for the last couple of days, like the last 5 or 6 days. The overall trend has not changed. It's still cruising along. Basically saying, don't worry, interest rates are not changing course. No, those are not going up. They're just chopping along, and people are taking profits. That's pretty much what it's trying to say. All right, now, brown cow. We'll take a look at the yen. See what the yen looks like. Remember, traders, if you have any question, not even a question, if you'd like to see a particular product, just shout it out. We'll put it up there. I have no problem stopping what I'm doing and going into looking at, the other products. And there's the weekly on the yen. You can see that's driving down, but look how sideways it's been. Look at the green line trying to turn up here on J4X. And then when we slide over to it on Chicago Quant, you'll see that same type of action right there. You can see, matter of fact, it's so close, it's only 17 ticks. 17 of a something or another to get into the buy. Let me just move that line up. See that? It's right there on the zero line, just minus 17. And then you can see at the same time, the daily is, it went into the sell here. And it's just extended all the way down. On Thursday, it went into the sell. There we are. Extend it, right? There we are. And you see, we went into the sell on Thursday. And you can see today they are trying to push it right into the buy. We're above the zero line. We got green. We got green. There it is. And that's very close. The weekly, too, is trying to turn, which is fascinating in its own right. Let's remove that, like so. And let's put the single line in like so. There we are. Or is it back here? It was back. And we were really thinking we were going to see the 25s. But it looks like 27, what is that? 20, the low is 20, let's see if we do it this way. 55, is that? 55. Or is that 99? So it's, either way, just barely dipped underneath 28. And it seems to be trying to find some strength now. That's kind of like where it all began in a sense. We saw it take off from the 115 area where it had held for many years. And from 115 to the dollar, it ran all the way up to 155, I believe, for the dollar. And a 5, matching inflation, which is interesting in its own right. They have changed the, what do you call it, the interest rates in Japan. They have, and they've added another half a percentage point or a quarter. I think it's a quarter. Home sales are coming up today. Is that what that is? We have home sales coming out in, I guess, an hour. Or it's already up. It's up 2.5%. So, but there's the yen. And so if you do want to see any particular product, I missed, did the DXY go into a buy? Nah. I mean, a daily, it's doing the daily a little bit. It's, matter of fact, it's just fluctuating. Here, let me put it up there. I'll show it to you. Here is DXY. There's the daily on J4X. Let's get it up there. Let's just get it up there before I go rambling here. There's the DXY right there, and you can see Friday had some green, and today they have some green, and the line is trying to get through. Now, when we look at it over on Chicago Quant, I think it did. Now that we say that out loud, I think it did go into a daily buy on Friday or Thursday, one or the other. Let's go check. Sometimes I just read the charts and go. That's what I do. I read the charts and just keep on rolling and understanding where the markets are. But I don't. Sometimes I don't. It doesn't sink into my noodle. Sometimes it does. In this case here, I think it was Thursday. Yeah. So you can see here the dollar index for the last couple of days since Friday have been trying to climb, and on last night it did. It's through there at the moment. We're playing with the daily buy as we speak, but that's really somehow or another it's combining last night's indice and today. We'll have to fix that. So it's not yet, but it's very close. And let's see if we can widen this. So, but the weeklies. The thing about it, I think I mentioned what I said was, notice the weeklies. The weeklies are not really reaching that much, So I don't really see the dollar going on some, tear on, taking a, big turn. I just see it just profit taking. I think that's how I described it about 10, 15 minutes ago. I think it's all profit taking going on at this point. I did show all three of the bonds we follow, the 30-year, the 10-year, and the 5-year, they are rising in interest. Have you noticed, Giannis, that fundamentals are actually starting to work again? The fundamentals seem to be having some influence again compared to how they've been for the last, 12 years or something like that now? Was it 2008 and 2020 is 12 years, so we're in 2023, so it's 15 years. But notice that the fundamentals, because of the inflation and the Fed raising rates over the last 6 months or 9 months, after getting rid of their crazy idea of what they called it, transitory. But notice that they are starting to reflect it. You can see the fundamentals are actually having more influence than they've had in over a decade. Is that just me, or are we really seeing it? I think we're seeing it. I'd like to have a hallelujah if someone can confirm it. All right. Anyway, there it is with the dollar index. So where were we? Oh, now we jump over to the Turkish lira, which has been orbiting around the all-time high now for weeks. I mean, literally ticks away from the all-time high. Turkish lira. Where are you, Turkish lira? Not there. Right there. Cancel. And let's go to the Turkish lira. Right there. Euro Turkish lira just keeps on orbiting. It slipped into the sell on Friday. And it's lifting back up again. But, we're in that long ride on the weekly, so you wouldn't want to take the short to begin with. Seems that policy still sets everything. Yeah, I know. I see fundamentals having a little bit more influence. I'm not sure if that's desperation to justify by the Federal Reserve. I'm not sure what that's all about, but it does seem like the fundamentals, they could be literally pushing things. They push everything. So, they might be like, okay, guys, let's try a little less technical analysis. Let's do some fundamentals now for the next couple of years. Yeah, they're looking at especially with the House of Representatives now. It seemed to me when it looked like that the Republicans were going to win the House of Representatives about 6 months ago, fundamentals started to mean something again. Maybe they don't want to have to answer to them. That's probably what the problem is. So like the Federal Reserve, as much as they try to be independent, they're not. And so they don't want to be in testimony left and right, like why have you been doing this for the last 14 years, or why have you been doing this for the last 12 years, that type of thing. When Trump tried to get them to admit to things and do audits, they just told them no, they weren't going to do it. They're independent. So maybe they figured they better do something more responsible, I guess. That's the way I look at it. More responsible. I like it the way you said it. Seems like the policy people still sets everything. It's just that the policymakers are looking once again at the data. Yeah, well, I guess that's their excuse, isn't it? In other words, the way they're trying to stop the recession or stop the inflation or whatever they think they're stopping is kind of barbaric. It's kind of like old school. Like as if there's no listed options and there's no electronic trading, and there's no instantaneous information. It seems very so old school. Like, let's see if we can get enough people fired. It's really freaking them out. I saw this on Friday or Saturday. I think it was Saturday. I was reading it. That what's really got them freaked out is the fact that they're seeing stuff like this. Here's the Turkish lira, right? But let's go over to something else. What would I want to do? They're seeing the unemployment numbers. What's driving them crazy is that the unemployment numbers are dropping still, and everything they're doing their best to influence the unemployment numbers, and it's not working, and it seems like it has them freaked out. I read an article. I think I posted it even, where the Fed is like, Powell. It said something like Powell is flabbergasted, or in other words, he's frustrated. Frustrated that the employment numbers keep on dropping. So in other words, unemployment is getting lower and lower, and they keep on raising rates, and they're trying to hurt the economy, and it's not working. They're finding that it's like I said, it's like as if they don't realize that it's not 1975 anymore. That's what it seems like. They're using concepts like Volcker. When Volcker started that stuff, Volcker, I guess, became Fed chairman in '76, and so it was old school, old school ideas, but those ideas are long gone. They just don't do what they're supposed to do, or maybe what it is that we're seeing it, and maybe they never did work to begin with. Maybe that could be literally part of the problem. All right, let's go over to the energy sector and look at Canadian at the same time. Where is it at? Well, we can go look at Brent. Let's check out Brent. There's Brent right there. And you can see Brent has been moving down from the 88 area down to the 86 area. You can see here the West Texas Intermediate crude. Where is it at? Right there. Trading at just underneath $80. And you see the pressure it's on it on the daily. And at the same time, you can see here, this is the Canadian itself. Normally when prices of energy go up, the 81, 82, 83, in other words, go in the other direction. Usually you get a downdraft of the Canadian, and you can see here Canadian was up to like 137, no more than 7 weeks ago, 8 weeks ago, and now it's trading at like 133. So it has that downdraft, and at the same time, you can see on J4X, you can see that the trend, same time period, has been on the upside. It's been going up in value from the low 70s, 71, 72 area, up to the 82 area. So it's done that. Now we're in a little drift here on the downside, and you can see this trying to turn up, but it's not doing the best of jobs here when it comes to the price of it. So that now we have two currencies that we've been following. We follow the Canadian against the Canadian dollar against the oil contract, and we follow the South African rand against the gold contract, and both of them they've just lost it. Both of them are not Canadian as much. Canadian is doing its job, but you can see here when we go over to the South African rand, you can see that South African rand is totally confused ever since, and we have lines kind of identifying it. And so what we have is and let's put gold. I think gold is in a daily sell, but for a couple of days now. But let's just put gold up there, and there's gold, but it's not that much off of the action. It's just going into this sideways move from this nice big move. And problem is that because of the politics in South Africa now, with the president and the $1 million and all that other stuff, we even have it on the chart there. Politics and $500,000 in cash, and it's really strangled that trade, which was working beautiful. Every time the currency moved, gold followed. It was a great lead to the action. Now it's totally different. So it's become a disappointment as far as I'm concerned. I was enjoying the idea that we could look at the currency and when it was moving against the dollar strongly, heading down, gold was going up. Now it's gold, it's trapped. Gold is trapped with the government problem down there. You can see it here. It should be, as far as I'm concerned, because of the price that it gained in gold. The South African rand should be like 14.80 to 15.20, not trading at 17.31 at the moment. And you can see it here. It's climbed into a weekly buy last week, and here you go. The first day of the week, they're taking it up. So, and all this is because of the money found in the president's office. The cash, $500,000 in cash found over there. $520,000 to be exact. Why they chose the 20,000, I have no idea. Maybe that's for the secretary. Who knows? All right. So from there we go to the last currency pair, and if anybody does want to see a currency pair, just shout it out. We'll go take a look at it. Let's go to the South African rand. I'm sorry, the Mexican peso right underneath it, right there, and that's hanging down at the bottom end of the range. You can see here it's in a daily sell for about 6 days now, and a weekly sell now for about 4 weeks. This is the 5th week starting now. There's the south of the border of the United States, the Mexican peso, and that kind of represents the responsibility side. It's gaining against the dollar, which means that they think that a healthier American economy helps Mexico. That's what they're thinking. Now, the Fed meeting starts tomorrow, and then they'll raise the rates on Wednesday. And everybody's just trying to guess if it's going to be a quarter or a half. So that's the... Now, today they're knocking down the stock market a little bit. We're seeing the S&Ps down about 40 points last I looked. All right. From there, I'll get rid of that. Yes. And we'll go over to... There's the S&Ps. You can see them. They're down from 41 and change Friday down to they've dropped over 50 handles, 60 handles, 70 handles. I think the low is 39 something today, or is it 40? 40 even is the low. All right, now let's take a look at. We can go metals. Let's take a look at silver. There's silver. Silver, again, flatlined like gold, like the South African rand, just flatlined and can't get into some type of direction. You can see it fell into the weekly sell last week, and you can see it's in a daily sell since Friday. But I'm not that nervous about it. In other words, I think the metals are still going to find ways to go up a little bit more. Let's put it up over here. That's gold. Now let's put up silver. And you can see that same sideways action going on. Ever since the politics got crazy down in South Africa, the metal itself is stalled. And then there's the silver trading just underneath the 24 area, 2370 offered. Oh, here we go. Hey Timothy, how you doing? I'm looking at GU buys. GU, what is GU? 1 minute scalp. What is GU? GU. I don't know GU. G would be a September, right? Or GU, is it a stock? What is GU? Let me look it up. If I punch GU into GU. Let's see if we can find what that is. GU. There we are. Nothing there. Something euro. Maybe it is. Is that it? Does that look like what you're talking about? Trading at 30? GP. Oh, okay. Cable. Let's take a look at cable. You're looking at a 1 minute? Let's take a look at it. There's a euro. Okay, let's put G cable in there. GBP. There it is right there. And it's loading it up. There we are. It's filling in. And let me just show you. Okay. And you're looking at 1 minute. 1 minute scalps. I don't usually do minutes. I just do spatials. So here it is there. We went into a buy right here. Put some lines in for you. So we went into a buy there. Make that green. Went into a sell right there. And now we went back into a buy right there. And we're still in that buy. And what did you say you're doing with it? Let's see. You are... I am looking at GP buys. Yes. Yep, exactly. I'm right on the same side of that. And it's we went into the buy there. It hasn't really gone too much. 123.93 up to 124. Well, it's pretty good. 7 pips, So there's the last 3 trades with our math. Starting off... when is that? It's like... and what's the time here? 4:38, and then that's 8:08. So it's like 3.5 hours ago. And then the last, what was it? There's the last sell right there. No, there's the last sell. Went into a sell right here. Didn't really go down very well, did it? It made a little low here and started to turn up. And then here's the last buy. Where's the last buy? There's the last buy right there. Let's put that in. I mean, not the last buy, that buy right there. There we are. There's like the last 3 trades. And the last trade now is a buy and still in the buy. How's that, Timothy? And then we can take this and we can turn it into a 1 minute chart for you. Copy and paste. All right, then that. Let's go like that. Copy and paste. Let's see. Format instrument. Settings. Let's make that a 1 minute chart. When I play with minute charts, usually I'll do like 3 minute charts or something like that. There we go. So it's just going into the buy right there. There's the buy. And then it wasn't a sell from here. Was it right there? Let's see. I think that's the last sell. Right there. Yeah. Then the last buy from there was right there. There we are. Interesting. Buys from 123.82 to 124.17. Is that what the high is now? 124 high is 124.18. Okay, yeah, nice. That's the minute chart right there. The minute chart. Like I said, I'm a spatial person where I do the spatial math instead. I like the ticks and contracts type thing. So there's the. Let's see. Oh, okay. I just changed it. That's what I did. Okay. So if I make a copy of that, like so, copy, right there, and then paste it. And then I can go back to the spatial, paste. Like I said, I find them to be more accurate. And then let's do this. We'll go like this. And the lines will probably come right back in anyway. or you know what? I'll go back to the previous one. Let's see, where is that? Cancel. Where are you, Mr. Mouse? There you are. Window. Let's go back to the spatial. Right there. I forgot which spatial we were playing with. I used 3 of them. Where's the mousey at again? Ticks. And I guess it would be, let me go see which spatial it is. Cancel. And let's see what the spatial is. Where are you, Mr. Mouse, again? Right there. I think we were looking at the 786. That's what it is. Let's fix that. 786. Yep, that's what it was. There you are. So yeah, cable's been interesting. You know, they raised the rates last week. You know, it's important for these central banks to try to stay in line, or things get really weird. They really beat them up. Now, what do we got going on there? That is still in a buy. So let's just remove those. That's the ones from the minute. That's what that is from the minute chart. It's still in the buy. What's interesting is see the manifold's really getting tight here. So might be getting ready for another shift in direction. So that's the game it plays, traders. All right. Where were we at from there? If you, Timothy, you want to see anything else, just let us know. We'll go take a look at it. Let's see. Let's go to, where were we at? We were looking at, let's put this up. We were looking at silver. Oh, let's take a look at copper. I was a little surprised with copper, how it's backing off. But Timothy, if you want to see something, just, you know, put it up on the chat line. We'll go look at it. There is copper. You can see it's been backing off for the last couple of days. And let's take a look at it over here. Come on, Mr. Mouse. Right there. There it is right there. You see it's been just a drift for 5 days now. Drifting down slowly. Weekly is looking strong. Only difference is that the fast-moving algorithm is trying to break down more. It's the China play, you know. If you want to get long in China, the best way to do it is, you know, get long copper. And so copper has made that nice move since the Congress finished in China back in late October, going into November, and you can see when we tighten this up. Is that it right there? Right there. It went into a buy literally as the Communist Party Congress ended. And it went from the 340s and it ran up to almost, 390, 393. And now it's run all the way up to 434. So, and I think we slid into a sell for 1 week and then right back into the buy again. And the daily jumped back into the buy right there. So, you know, it's this is the, you know, copper is the big investment tool. If you want to play long China without risking your money, you know, in the sense of putting it in China and not being able to get it out, that's the place to play. As we sip our tea. All right. And Timothy, if you want to see anything else, like I said before, just put it up on the chat line. Now, from there, we'll go over and take a look at platinum since it's Monday. And there is April platinum right there. It was really scraping the bottom. Oh, look at that. Yeah, see, it broke down very close in a weekly sell. This is not something we want to see. We want to see this thing turning back up, or we're going to start losing faith in the metals complex. I know a lot of times between India and China and Asia in general, you know, the Lunar New Year brings strength into the metals complex, and then after the Lunar New Year is gone, it kind of goes into a back and fill type of thing. All right, and then from there we go over to the energy sector, and there is a spot oil. As we see, it's kind of drifting a little bit down. You can see it's been in a daily sell for a bunch of days, and now it closed in the weekly sell. So we're seeing a little pressure there. And then we had Brent up there a few minutes ago. Let's put Brent back up there again, right there. You see the Brent hanging out in the 86s compared to the 89s. And is that where it got up to? There's 87, 88, 89, 89 and a half, something like that. Almost 89 even. That's 89 even in there. So you can see it's burying itself. It's trying to move down on the daily. The weekly, let's see how the weekly looks here on Brent. There it is right there. Red. Oh no, not red. Still green. And it's at the top end of the range. That's something to, obviously be careful about, in the sense that I don't really think oil contracts are going down too much. I don't think they're going up too much. I think they're just going to be hanging out. I guess seasonal characteristics will have influences in the end. I think that's how it really plays out. I think that's really what it comes down to in the end, is that the seasonality will kick out. So now from there, what do we got going on from there? We've got a look at, let's see, that is March. Let's look at May oil. March is trading at 79.44. Oh, and that's something else we didn't talk about in the gold. We mentioned it on Friday. Let's just take a look at that. And it's trading, it's about 43 cents over the back month. Now gold, let's just show you something here. We used it as a headline on Friday, and we're going to put that up on the screen here. It shows all the back months and the contango that goes on with gold. And one of the reasons why I said, 2-year gold is trading at right price, it's because it's at all-time highs. So here, let's just stick that in there, and you're going to see what I'm talking about. And there's the gold contract. And here we go. And so here we see it right there on the screen. You can see. So in other words, right here, there's the February contract getting ready to go out the door. So now we're watching the front month now is April. It's got 380,000 open interest. It's picked up another 100 and some odd thousand in open interest in 3 days. Now it's trading, almost 70,000 contracts on Friday. But what's interesting is that you see it's trading at 1942 right there. Now, look at April of 2024, not 23. And there's April of 220. Oh, didn't mean to put the chart up there. Let's go back. And so there is April of 23 is trading at $100 higher. See that right there? It's trading at right there at $2,043, whereas April of today, this year, the front contract now is trading at $100 lower. Okay, then you go and look at 25. So in other words, 2025, and there is let's see, there's June of 225. Okay, but they don't have an April contract. And you can see that is trading at $2,119. So as far as I'm concerned, the back months, and they're using the old, well-established, the Feb cycle. Feb, I guess it wasn't April. It must have been Feb June or Dec June. So you notice they go Dec, they do 6-month wides. Dec June going out. And so you can see in 2025, it's trading, where is it at? The June is trading almost $200 higher than today. And that's what we talked about on Friday. How that is well worth paying attention to. And that is that the back months who can't be delivered are trading just like the way coins are, and the frustration and so forth that everybody's trying to, get their hands on. Also, we're at all-time highs in inflation, or not all-time highs, but we're at 40-year highs. How is gold not like 15 or 20 bucks underneath? In other words, it should be. It should be trading with a premium. And they're doing the same thing with silver, too. Now, silver is nowhere near as prolific. It's trading at $26, that type of thing. We could show you the way the contango is working with silver, but it's, you would think that maybe it was trading at $54. It's not. Let's just go back to it real quick again. Unfortunately for silver, it's not reflecting at all the strength in the back months, but gold is, which is very interesting indeed. It's now here. Let's put it up on the screen. Here is silver, and so there we go, like that. So silver, let's see, was it? What's off? I think we're working, right? I can hear us. I can hear me. Have we lost sound or? Yeah, so there's silver. So there's March silver trading at 23.80. Okay? Right there, 23.80. And then, let's see, here it is. Yana says that message was, okay, no problem. And so then you go and look at March silver of next year. And it's only trading $1 and, not even $1 over. It's not double, not the way gold is literally, $100 up. It's only like $1 up. I guess that's double in some sense. And then you go and look at March of 24, which is basically, there's July of 24. Okay, right there. It's trading at $25. Nowhere near the push, as far as I'm concerned. Nowhere near the percentage change. So, gold really reflects it, which then makes all the sense in the world. In other words, for the longest while now, with this 2 years of high inflation, 2.5 years of high inflation going on, we've been saying this makes no sense. How does not gold trade at all-time highs? Why, if inflation's at 40-year highs, why isn't gold at almost all-time highs? I could see it being $50 off or $100 off. So in other words, it should be like trading at like $2,050, $2,100, something like that. At least not at 19 and change, So yeah, isn't that something, Robin? And then so I noticed that when I was I accidentally put in April of 24 into the system when I was updating for gold, and moving from the February contract to the next contract instead of 2023, and that's how I ended up paying attention to it. So there it is, trading at 1942, and then a year later it's trading at 2043. It's $101 higher. And so, the only logic in my head was they can't exercise it. I mean, who wants to exercise, something that they can't take delivery of it. They don't have a choice. It's like a European option in a sense. So they don't have much of a choice. So it just hangs out in there in that price area. All right, and then let's take a look at, we were looking at the energies. So, and they're doing somewhat of the same thing. It's a higher price in the back months. And so then, same thing. Delivery, they bring it down. So then look at natural gas. There's natural gas. We're at 260 something. Remember when we talked about this, when it came from $1.38 up to $10. And, remember that guy asked you, how much lower can it go? And it's like, probably like, 2 something, right? And then I tell him like 250, 260. And that would still put it up almost, what is that? Almost like 70%. I think I said that. 70% higher than where it came from 3 years ago. And that's where we're at now with natural gas. Natural gas is trading at 269. And so you can see that pressure on it. And then when we go over to, where is it at? We go over and look at, Oh, I know it is. We don't do any more of the contracts. What we do is we go over to J4X, and J4X has there's the American natural gas. 2.68 right now. Offered at 2.69. So it's moving down. Then we go over and look at and that's the weekly, of course. There's the daily, same situation. Then we go over to this one. Was it? Let me get rid of that. There we are. And then we go over to the energy company in Spain that we can see the stock price of, right there underneath it. And it's trading at 25. It not falling down as much. Notice it's been bouncing between like 26.30 and 25.90. It's not really back and filling the way we would like it to back and fill. So, all right, traders, that's pretty much the name of the game here. What we'll do is we will call today, and we will see you all tomorrow, same time, same channel. So this is Doc from North America saying happy trails to you until we meet again, which will be tomorrow. Happy trails to you, to all our trading friends. Later, traders. Oh, you know what we should do? Going out the door, why don't we take a look at the 1 minute and there's the 1 minute British pound, and it's rolled over now. We went to a sell right there, and still in a sell. Couldn't get in there. Let's see that little tail there keeps it in the sell, and that long tail is keeping it in the sell too. And then let's go take a look at it in the spatial form right there, and it broke down right there. Let's move that one over. And that's in the sell there from the 23.91 area, almost 92. And now we've traded as low as 23.82. So 10 pips, not bad. All right, this is Doc saying arrivederci.